Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 13 to 15 as key support, and holding above that brought the 22.5 to 24.5 area into play as the upside objective. And in the overnight session, ES ended up hitting a high of 1925, and at this point, it's getting a little bit of responsive selling off that zone. Now, heading into the open, short term, we know that the buy side is in control, but 23.5 to 25.5 is an important inflection point, and as long as we can hold above 17.5 to 19, and if we start balancing, especially above 21.75, which is the overnight breakout level, then it would be setting up for a break above 23.5 to 25.5 to revisit the 32 to 34 initial resistance zone. We have an open gap at 32, naked VPOC 33.5, so then that area would come into play, and potentially 37.75 to 40.75 where we could get responsive selling yet again. So heading into the open short term, we are going to give more edge to the buy side, and understanding that 23.5 to 25.5 is an important spot and it is important resistance, but as long as we continue balancing above 17.5 to 19, then it's more likely that we'll get a break above 23.5 to 25.5, and then the high odds target on the upside is 19.30.5 and 32 to 34. Now we could get some responsive selling at 32 to 34 depending on how the market is shaping up in real time, but that zone is better served as a profit target rather than a spot to short the market. But that's something that we will have to determine in real time. 37.75 to 40.75 is a spot that still has potential to cap the upside and attract responsive sellers in this market for a rotation back down towards 32 to 34. On the downside, a break below 17.5 to 19 would be a sign of lack of strength, and it would be a sign of weakness, and it would bring 13 quarter to 15 quarter into play. That's kind of the last spot as far as the overnight bullish price action is concerned, and ideally buyers hold that area. Ideally buyers hold 17.5 to 19, but worst case scenario, 13 quarter to 15 quarter is a spot that is very key in the market at this point, and a break below it would open the door to shift control from the buyers to the sellers, because at that point, the entire upside move that we've gotten in the overnight session would be taken out, and that could result in some short-term long liquidation. We're going to be using 1910 as the overall bull-bear line in sand, and if that level gets taken out, then at that point we are probably going to be heading down towards 1975 to 1902.75. So then that support zone and the previous day's overnight low at 1903 would come into play. That would be a pretty big shift in this short-term upside momentum that we've seen in the market. So as long as we hold above 17.5 to 19, the buy side can maintain control, and we can look for a move above 23.5 to 25.5. If we start getting multiple tests of 23.5 and 25.5 and just continuous failure at that zone, then the market could set up for a move down to 13 quarter to 15 quarter, potentially 1910, and then breaking those levels would actually tell us that the market is quite weak, and as long as the range really hasn't been too exhausted on the day time frame, and the market internals are also putting in a bigger reversal, then we could get long liquidation down to 0575 to 0775 and 1975 to 1902.75, and this is a zone where responsive buyers can still be active, and at 1975 to 02.75 we can still get a buy response and pop back up towards 0575 to 0775 and potentially 1910, depending on, again, how the market is shaping up in real time and just how weak the market would be heading into that zone. But it's pretty far away. right now, so it's not really in focus at the moment. I just wanted to cover that scenario in the event that there is a bigger picture reversal within this balance off of the 23 half to 25 half. But right now, short term, all the signs are pointing to continued upside. And again, as long as we hold above 17 half to 19, the focus is going to be more on the long side, unless there are just some very, very clear signs in real time telling us that the upside is just no longer intact. But aside from that, as long as there aren't any clear signs pointing to downside, the default bias on the day is going to be bullish, especially above 17 half to 19. And the market can now balance between pre-market support, pre-market resistance, and then eventually put in a breakout above 23 half to 25 half to go up and test 32 to 34. That would be then the primary upside objective above that zone. And then even with potential to go higher and find sellers at 37.75 to 40.75. So those are the main thoughts heading into the day. Let's see how well the buy side holds it up this morning and take it from there.